Hello everyone, this is Mingjong. Welcome to today's video. So in this video, I'm going to show you how to judge the price action momentum using the RSI indicator and also the rising wedge pattern. But most importantly, I'm going to emphasize the rationale behind the pattern and also the indicator, such as like why the rising wedge is bearish in nature and what the bearish divergence in RSI actually means. So once you understand the rationale behind and also the first principle behind it, then you don't really need to memorize every single pattern or indicators in order to start trading if you prefer. So let's get started right now. So as you can see in this daily chart here, we're still using the S&P 500 E-mini futures, as you can see. So let's just analyze this a little bit. So we have formed a bottom on the 23rd of March, and subsequently we form an uptrend. But from this chart, I can see that the momentum is fading. How? There are quite a few methods. So one of them is obviously, I think is very popular. Then we can actually just draw a line here. And you can see that this is actually a rising wedge pattern. Let's change the color a little bit. And also the line as well. Okay. Alright, so you can see that we have a rising wedge pattern once we connected the low here and also the high here. So that's the rising wedge pattern. So rising wedge is bearish in nature. So it's quite maybe a bit confusing. It's actually a bearish wedge, but it's a rising wedge as well. But anyway, so what's the rationale behind the rising wedge? Why is it a bearish formation? So first of all, if we just delete this line and let's just clone this. Let's clone again. Clone. Okay. Alright, so now we have a channel. So as you can see, when the price bouncing up and down here and up to here is somewhere around the middle, it actually fails to touch the overbought line. So when we draw a channel here, this is the demand line and this is the overbought line. So if the price failed to touch the overbought line, it means that there is some kind of the momentum is losing here and there. So this is one of the reasons. And the real reason or the fundamental or the first principle behind is actually we're losing the upward thrust. So we can actually see it in H4. It's clearer in H4. So this is what I'm talking about. That is the upward thrust. As you can see, this is the first thrust here. We measured it from here. So the first thrust, that means that the progress that the S&P made from this breakout point. And subsequently, we have another thrust here. So this is another progress after it break out from this high here. And then eventually we do make a little progress here. And then another progress here. So as you can see that this is the upward thrust or the progress the S&P 500 made. So first progress is quite a lot. Subsequently, you can see that the progress is getting shorter and shorter and shorter. So that's what I mean of shortening of the upward thrust. So this is the real reason or the first principle behind. So we are losing momentum not because of the rising wedge shape or other things. It's just because from this price action alone, we are losing the thrust, the upward thrust. Or if you can just see the wave. So this is the first up wave, the second up wave, and this is the third up wave. So you can see that the up wave is getting shorter and shorter. So the fourth up wave is actually somewhere equal here. So we can actually measure using the upward thrust or using the up wave to judge how the momentum is like without drawing the conclusion using the pattern or using any other tools. So this is the first principle that I am actually talking about. and this is the fundamental of the price action. So instead of just memorizing every single pattern, just try to understand the reason behind the pattern, so that you don't really need to memorize every single pattern in order to trade profitably. So another thing, or another indicator that I would like to show you is RSI. Let's just quickly put out the RSI indicator. RSI. So with a losing momentum, I'm actually expecting some kind of the bearish divergence. So let's just find the bearish divergence here. Alright, so here we go. Let me just put out this arrow here. We can see that as the high, as we form higher high here, then we form actually lower high in the RSI indicator. So this is the price, is forming higher high, higher high, higher high, higher high. But here we actually forming lower high, and lower high. So this is a sign of losing momentum in the RSI indicator alone. So, but just try to understand what does a bearish divergence actually means. So a bearish divergence it just doesn't read like it's actually very bearish. It's just that it's actually losing momentum. So once it loses the momentum, that means that the buying momentum is fading, and we're actually expecting a reaction or a pullback. So this is the meaning of a bearish divergence in RSI. It doesn't mean that we will have a significant pullback, or it doesn't mean that we will definitely have a reversal down. So a bearish divergence in the RSI simply means that the buying momentum is fading, we're losing out of the buying power here. So we shall see a reaction come. So the extent of the reaction is quite important in this case, and this is how we judge whether this will form a trading range or we will get a reversal from here on. So this is the benefit of reading the price action rather relying on the pattern or using the indicator, because with the pattern here, like if we say that oh, this is a rising wedge, a bearish wedge, and is bearish in nature, but it doesn't really mean that once we broke out of the bearish wedge, it will certainly just have a reversal and going to test the selling climax low. No. So what we get is actually when we actually broke out from this rising wedge, or when you're actually forming this rising wedge, then we can just tell that okay, the buying momentum is fading, and we shall see a reaction. And whether you will get a very significant reaction, or just simply a pullback, or simply maybe a reversal from here, then we'll need to judge the down wave or the supply level as well. So as you can see, so far we have a little bit increase of the supply here. Let me just mark this. So we got a little bit of the increase of the supply, and also on this day as well. But just look at the result. So this is the first down wave that we get. I think it's the largest down wave since this uptrend from 6th of April. So we get some kind of pullback. But look at this reaction. It's just not that significant. So far it's not that threatening, I would say. Just because that we're losing momentum or forming a rising wedge, or we got a bearish divergence in the RSI indicator, doesn't mean that we have to go all the way back to test the selling climax low. But first of all, we just need to acknowledge that we should see a pullback, and we should judge the character of the move itself and assessing the supply level together, and to trade onwards. So this is how I will look at how to judge the price momentum by using the up wave, up thrust, or if you prefer just by looking at the pattern, that's fine as well. Or if you are very familiar with the RSI, or just think that RSI is a lot easier, and it's fine as well. But do remember the rationale behind the rising wedge pattern or any other pattern or the indicator as well, because once you understand the rationale behind or the first principle, then you should be a lot easier to interpret regarding the situation. So I hope you get something out from this video. If you enjoyed the video, just click like and also hover to my channel to follow me, and do remember to subscribe to my channel as well, so you will get instant notification of my future videos. Alright, so have a great day ahead. I will talk to you soon. Thank you. Bye bye.